We're joined now by Peter McGuire. He's founder and managing director of investment firm CWA Global Markets. He comes to us now from Sydney. Good morning to you, Peter. Thanks so much for joining us. So, what's driving prices at this precise moment in time?
Well, good morning, Lindsay, and thanks for inviting me on the show. A couple of quick things. OPEC must be very, very satisfied with what has happened over the last year, and prices at the moment seem to be fairly range-bound in the the low 80s, Lindsay, up until probably 74, 75, and they've been like that for the last couple of months. It's going to be interesting what happens tonight, but we think that there's not a lot of news coming out. Compliance is another issue, and the reality, you've still got the Gang of Four that don't play ball: Angola, Venezuela, right, Iran, and of course the other mob.
Now, you just brought up this compliance issue. It seems that compliance with their own quotas has fallen to 53%, so they're producing much more oil than they've agreed to produce. How much of an issue is this for the markets? I mean, OPEC isn't very credible when they do that, are they?
Well, they're not, Lindsay. They only control around about just over 40% of the global oil. The reality is that they're not a cohesive unit. It's very hard to get the same set of rules across the whole sector, and each particular country has their own agenda. So until you can get a uniformed approach, it's going to be very difficult to police from a compliance angle.
And the temptation to cheat is all the more when oil prices rise. As you said, it's been range-bound for a while, but the Saudi Arabian minister is saying this is the right price for oil. Is it the right price for oil? Obviously, the OPEC ministers like it, but how about consumers?
Well, you were just saying earlier, you've got record high prices at the gas tank in the UK. I think that you're going to see probably higher prices coming into the end of this year, or maybe even mid-year, with the driving season starting in the Northern Hemisphere. So you could be pushing 85 to 90, and we know that there's plenty of oil out there, but if you get something on the geopolitical front, Lindsay, that could put a little bit of horsepower behind it, so you might see higher prices.
So what's your projection then for oil over the next few months?
Well, if the US dollar stays where it is, these guys are over the moon. Oil's up in real terms about 7 or 8% compared to where it was in early December through the US dollar strengthening. Maybe $80 to $85 is the new range, Lindsay. We'll just have to wait and see, but I think that's more or less the money in the short term.
Right, we've seen a lot of activity, M&A activity among the oil companies recently. Is that something that you expect to continue? What does that tell us?
That tells us that countries, not only M&A, but you're looking at countries doing major strategic partnerships like China and so on with Brazil, Iran. We're going to see more of that because of the demand from the emerging markets. That's where the growth engine is, Lindsay, and that's where you're going to see a lot of large M&As over the coming years.
Peter McGuire, Managing Director, CWA Global Markets, thanks so much for joining us from Sydney.